Good morning, welcome to this morning update from Phoenix Blue on Wednesday the 5th of October. I'm Tom Colley and I'll talk to you about the markets and the news. Yesterday we had a really interesting day. We had a new low for the pound, we had a big sell-off in gold, and we had reports of the ECB preparing to start tapering their bond buying programme. So we saw a lot of activity yesterday. And we'll go through the appropriate charts in a moment. But first, just let's have a quick look at the news events themselves. It wasn't the news events yesterday that drove the markets or these announcements. It was other events outside of these announcements which really caused all the action. Okay, what we saw was some good PMI numbers from the pound coming in at 52.3 against a forecast of 49.1 on construction. Even despite this, the pound had already broken to new lows. A lot of talk at the Conservative conference of what's being termed a hard Brexit, meaning that the move away from the EU will be a more significant break than potentially would be the alternative. We also had a negative on the New Zealand dairy price index coming in at -3, previous being at 1.7. We don't have a forecast on there. Today, well, Chinese bank holiday, but it's Chinese bank holiday all week. We had overnight, we had Aussie retail sales coming in a nice positive number there. One to watch out for this morning, services PMI. It won't surprise me to see good numbers on that, bearing in mind we have a very low pound and we still have open access to the EU, meaning that if we can't be, or if the UK can't produce decent figures at this moment in time, it's really going to struggle when it doesn't have that unfettered access to the EU markets. ADP non-employment change. Non-farm employment change, this is a precursor to the big one on Friday, may give us a heads up, but certainly is not an absolute or any great direction in terms of what will happen on Friday. CAD trade balance come at 130, then the ISM non-manufacturing PMI, another one to watch for the States, that can give you some sort of heads up again for non-farm on Friday. We then got crude oil inventories. Well, we've seen crude at new highs recently. It's currently at about 49.50, targeting or heading towards potentially the $50 level. This could have an effect on that, although its other effects, such as the OPEC agreement to cap production, that's had more of a significant effect on that bullish move so far. Okay, and then early tomorrow morning we have trade balance from the Aussie. So let's have a look actually what happened yesterday. Here's the dollar index. Through the early part of the day or early afternoon, we saw a break above this key level here at 96.20. We've been looking for a close above this level to confirm dollar strength, to give us the confidence to trade that dollar strength through the majors and minors. We got above that level. Then we got the news in, or the reports about the ECB considering the tapering of their bond buying programme. This is effectively the beginning of a contraction in the amount of quantitative easing that the ECB will undertake. That came as a big shock. We had a big shock move to the downside, down to this other level here, about 95.75. We subsequently saw a significant recovery in dollar strength from that. We didn't obviously get above this 96, or didn't get to close above this 96.20, but dollar strength continued and returned to the market after that shock. If we go over to the euro was trading down at this level right down here prior to the ECB report. That naturally, the reduction in the tapering naturally gave us a bullish move in the euro, and the euro retained that move as the dollar came back. So we've had a realignment effectively there between the euro and the dollar. We still remain within this triangle here, and I was reading last night the last 3 months has been the tightest confine that the euro has been in since the actual inception of the euro many years ago. So we are still waiting for a breakout in that triangle, either to the downside or the upside, in order to have that market moving. At the moment, it's just a market we're not interested in. We are just sat on the sidelines waiting for something to happen. Conversely, on the US dollar JPY, the yen, the dollar strength in the early part of the day gave us a really strong breakthrough of this key level about 101.80-85 here, and this trend line that we've been under for a long time. This is just the latest version of it. It does go back almost to the beginning of the year, so that's really significant. We will be looking for a pullback to this level here to trade it to the long side, which has been our objective for a considerable period of time now. However, we will be trading with caution this week, so entries here will be price action entries rather than the normal limit order entries, so that we get an actual reaction at that level prior to entering the trade. That's predominantly because non-farm coming up, all that news that's been going through. We really want to see it play out and go into next week. Hopefully we may get the opportunity to return to our normal method of trading on FX, which is limit orders and 40 pip stop losses. Here we've got the pound. Well, this was the post-Brexit low. That was the lowest for 35 years. We've now broken below that level. In this market, we only see downside 1.25, potentially a medium-term target here. We will be looking for opportunity to sell this market on any pullbacks, be that a pullback to this level that we broke, the previous low we broke there, or potentially one of these other levels at the top of this channel here to take that further to the short side. So anything pound, only short at the moment. This is predominantly because we've had in the last few days, we've had the announcement from the government that the Article 50, which is the start of the process to leave the EU, will be signed before the end of the first quarter. We've then had the Conservative Party conference, where we've had a lot of talk about not being willing to move from the stance of reducing immigration. On the counter side to that, the EU are saying that they will be insistent upon free access to the market can only be had with freedom of movement, which means open access for EU immigration. So they seem two things that are incompatible, and this has been termed by the press hard Brexit. So that seems to be the way that things are moving. So again, that will we only see that as downside for the pound. This is the Aussie. This is one of the trades that we're in at the moment. We've traded this right hand shoulder of this 4-hour head and shoulders formation here. We're now looking for a break of the neckline for price to retest that and take it down to our targets around 7,500 here. We had a nice play out yesterday against the dollar strength. We saw the shock announcement from the ECB. The dollar retreated, but the Aussie didn't return to it in a bullish direction. Then as the dollar strength came back into the market, price pushed down to the downside again. So we ended up with a really nice 4-hour bar there, taking us from this trade into our T1 target. Stops are at break even. So we've got half a position on the table looking to get back in at this level. So we'll have a larger position through to the bottom of the target 2 area here, stroke the channel there. Over on the Kiwi, well, we had a close below last night of this level around 7,220. We are looking for another close below and a lower low before we look for a pullback into that level, but that looks like a really nice level. We saw a similar sell-off in this market as we did to the Aussie, although to be fair, the Kiwi slightly stronger against the dollar, the movement less concerted. So, but that's clearly an opportunity for potentially tomorrow or maybe intraday today if it does pull back to that level. But we are aware of non-farm payroll on Friday, and we are cautious about what we put into the market ahead of that, because for that announcement we want to have no risk on the table, which means no trades without stops at break even as a preference, unless they are specifically targeting one or the other result of from the non-farm payroll data itself. We also had a big sell-off in gold yesterday. This was matched by a big sell-off in silver as well. Why did this occur? Well, we've had since April, which is really right over here, we've had a commitment of traders extreme signal. That means that the market, or the commercial traders in the futures markets, are at a point where they have reached their maximum level, and on previous occasions when they reach this level, we would look for the market to sell off. Now clearly it started to do that. We'll be very cautious about where this market might go in the short term. We're waiting for the weekend when we have new commitments of traders data, which will allow us to see how the commercials actually reacted to this, or how they actually generated this move. We did see in tandem a more restricted downside movement on equities, US equities yesterday, but we potentially see this playing out to one of these two levels here, and a reversal in the commitment of traders positions, so we get an indication that they're at a low before trading it to the long side. When we do get to that low, I anticipate that potentially we are basically having a readjustment, so that the markets can return to a risk on, risk off scenario, so that we, rather than gold moving in, or safe havens moving in tandem with equities, we'll see them moving inversely. So we would expect to see a fall in the equities, offset by a rise in gold. So potentially this is the resetting of those markets that we've been waiting for. A lot of things happening at the moment, but as we can see from what we've got there, a lot more interest in the markets, a lot more opportunities suddenly starting to appear. We need to be particularly cautious this week because of non-farm. If we get something definitive from non-farm, we could have some really nice markets to be looking at going into next week, but we'll be cautious until that point. Now guys, if you're interested in the way that we trade using fundamental analysis, seasonal analysis, technical analysis, and also particularly commitment of traders analysis. We have an upcoming event we do this monthly on Wednesday, October the 19th, an opportunity to trade live alongside the Phoenix Blue fund managers at an event in London. If you are interested in doing this, it's absolutely free. You'll have the opportunity not only to trade live on the day, but you'll also have the opportunity to talk to the fund managers, to talk to other Phoenix Blue members who've dramatically improved their trading by using our methods and techniques. All you need to do if you're interested in this event, it will be in London, October the 19th, is pop onto the Phoenix Blue website, go to the events page, click through, and it'll give you the opportunity to send your details to us, and then we can send you all the joining instructions, etc., and the invitation for this event. Suggest you, if you are interested, you do that sooner rather than later. These are restricted number events, only because the room we do them in has a fixed capacity. So the sooner you book up, the sooner we can guarantee a place. Okay guys, so really interesting what happened yesterday. We'll be looking to try and take advantage of that cautiously ahead of non-farm on Friday. Good luck with your trading, and we'll speak to you again in the morning. Take care. Bye-bye.